Riots in Greece, downgrades for French banks, and Europe sliding deeper into its debt sinkhole. All in all, not a happy time for investors. To see how Wall Street digested things at the week's end, it's over to Jane Edwards.
Thanks, Alan. Investors got a temporary reprieve on Friday as some positive signs emerged from Europe. The Dow and the broader market gained, but the Nasdaq fell back because of a massive profit downgrade from the makers of BlackBerry smartphones. Markets in the Northern Hemisphere were reassured after the Greek Prime Minister reshuffled his cabinet to get political approval for unpopular austerity measures, while the leaders of France and Germany indicated they'd work together on a quick resolution to the crisis. More talks are scheduled over the next few days to decide on the structure of a new Greek aid package. On commodities markets, the oil price plunged by 6% over the week to a 4-month low because of demand concerns and uncertainty in Europe. At the end of a volatile week, the US market finished where it began. The UK slipped by 1%. Europe had a big rally on Friday, lifting it to a weekly gain, while Japan and Australia lost 2%. With more, here's Tom Elliot.
Well, as you just heard, global share markets endured another pretty torrid week, thanks mainly to ongoing fears about the Greek debt crisis, and the Australian market was no exception to this. Now, bank stocks here were actually fairly mixed. The ANZ and Westpac were weaker, the Commonwealth Bank was flat, and in fact NAB managed to eke out a small rise over the past few days. In the insurance sector, however, the news was not so good. Now, first up, QBE decided to downgrade its profit early in the week. Really no surprise there. It, like many other insurance companies, has had to endure a very large number of natural disasters over the past 12 months. Later in the week, Insurance Australia Group, which many people thought might be a takeover target for the Commonwealth Bank, well, the CBA came out and said it wasn't interested in IAG, and the insurer's stocks fell like a stone. Turning to the wealth management sector, and one of the few bright spots in the market, IWF launched a 75-cent a share bid for DKN Financial Services. DKN closed up 37% on the week. Qantas shares were down again. Now, the company has announced that it's going to defer and or cancel quite a few aircraft leases. This is because demand for transport isn't very strong, and as we already know, Qantas is already engaged in quite a significant bout of cost cutting. Turning to retail, and Melbourne shoppers got quite excited by the opening of Spanish giant Zara's first store in the Bourke Street Mall. As a result, shares in both Myer and David Jones were down, although not significantly over the past few days. And media stocks, well, they had a terrible time of it. Fairfax off 4%, Seven West Media down 5%, News Corp down 2%. It seems that advertisers are not buying the ad space that these companies offer. And finally, Woodside Petroleum, usually quite a bright spot in dull markets. It was marked down heavily during the week when it announced that its Pluto LNG project would be delayed several months. Winner of the week is Kangaroo Resources, up a whopping 33% after acquiring a coal project in Indonesia. Loser of the week, and there were plenty of them, is uranium producer Paladin Energy, down 13% after Italy decided to cut back on its nuclear power program.